German Chancellor Angela Merkel has said her country will do whatever it takes to save the euro. Investors are listening as the common currency has climbed 2% since the beginning of the year, and now many traders are thinking the worst may be past. According to data compiled by Bloomberg, strategists have stopped cutting their estimates for the euro against the dollar, and demands for contracts used to hedge against the declining euro are dropping, or the concern that the euro will decline are dropping away at the fastest rate since September. So is the European crisis really clearing, or have we only hit a lull here in the storm? Joining us to discuss this is Mark Grant. He is managing director of Southwest Securities. His out-of-the-box commentary is read in almost 50 countries by more than 5,000 financial institutions. Mark, we appreciate you stopping by, spending some time with us. Let me just ask you first, does Angela Merkel's commitment to the euro give you some confidence that the region and the currency will gain stability?
I tend to be one of those guys that look at what people actually do. I agree with you that she's made the comment that she's going to support the euro, but this is one of the same kind of comments that have been made for the past 6 months. I think the jury is still out on exactly what's going to happen, though certainly it can be said with accuracy that there's a lull in terms of people thinking that the European Union is going to fall apart at this point.
Well, that's what I want to ask you about, Mark, because, you know, Matt and I follow your newsletter very, very closely, and there are times you write them and scare the heck out of us in terms of what's going on over in Europe. Right now, it feels like you said there's a little bit of a lull. I mean, is it time to kind of kick back and relax here, or are you saying not much has really changed in the last 6-8 months, past year or so?
I mean, not much has changed. I think that's a correct statement, Carol. I mean, you still have Greece, which at some point is going to have to get restructured. In Ireland, things look a little calmer. It looks like they're going to pass the financial bill prior to going into their elections. And while they're having political problems at home, it looks like the bailout is going to go through. But still, we're waiting to see what happens with Portugal. Still, we're waiting to see what happens with Spain. So while I've said in my commentary to the large institutions, look, bet on the stock market going higher, bet on a better American economy, bet on yields on the long end of the curve going higher. Still, it's like the sword of Damocles. It's there, and we have to recognize it.
And Mark, you know, you wrote a great note on ECB bond purchases last week, saying it's massive intervention and putting forth a lot of evidence to that point. You said 2011 will require bond buying outside of the present boundaries of capital that is available. Do you think that the big euro countries are committed enough to the currency to come in and put that money where their mouth is, so to speak?
I think the ECB and the institutions that they either own or control, plus all the central banks of the different countries, have been supporting the bond purchases in massive ways, which is true both politically and economically. And then, of course, they've put a lot of heat on the institutions, the banks, and their countries to support these. But we have a tremendous amount more financing in 2011 than in 2010. So you have to have the world's institutions come back on board and feel that they're safe in purchasing the sovereign and bank debt of Europe, or there's going to be real trouble. But
won't they? I mean, you say if Europe does not increase its federalistic funding capacity, yields will hit the proverbial wall. But don't you expect them to do that?
I expect them to do everything they can to encourage it. But then you've got Portugal, you've got restructurings in a couple of countries, you've got the potential of Spain. And while things are looking better, you can't ever forget the fact that they're there and the thing could come apart.
Mark, if anything we learned during the financial crisis, that we're all interconnected, and just kind of building on this point that you're making or we're discussing, I mean, China just this month saying it plans to buy securities from the region's most indebted countries. I'm talking about the European region. Japan said on January 11th it's going to buy bonds issued by one of Europe's bailout funds. Russia, it's got about $500 billion worth of reserves. They may do the same on January 18th. I mean, they were talking about all of these moves. So it looks like the world is being incredibly supportive of what's going on in Europe and will do whatever it takes to protect the region. Isn't it safe to say that that's what's going to happen? I mean, nobody wants to see another significant financial crisis like the one we went through just a few years ago.
Carol, I think you're right in the sense that a lot of foreign countries, China, Russia, and so forth, Though I have to say that Russia said they will not buy Spanish debt recently. But in general, certainly nobody wants to see the repeat of the American financial crisis. People want to see Europe there and on board and as kind of the second world's reserve currency. So it's not in anybody's interest that it goes kaplooey. On the other hand, you have to recognize the fact that this is a house of cards, this is a pyramid, and if something does happen, it's going to be very unpleasant.
Are you telling investors should have absolutely no exposure at this point to the euro or anything related to the European sovereign debt situation?
Yes, I have no exposure to any of it, either positive or negatively.
Well, let me ask you, Mark, if you sort of step into Angela Merkel's seat, why would she say that she'll do anything to save the euro? I mean, it doesn't seem to be politically advantageous to her. I don't know that the German folk are behind the euro and the euro region's connections here. Why would she put herself out there like that?
Well, it's very advantageous to her. Germany is the largest of the European countries, and it's driving the political situation over in Europe. And if you want to take a long kind of historical view, sorry, I'm having an issue with this. If you want to take a long kind of historical view of this, Germany has tried several times in the last 100 years to gain control of Europe, and they're doing a pretty good job of it at the moment.
All right, Mark, thanks so much for joining us. We appreciate you pushing through those technical issues that you may have had there. Mark Grant from Southwest Securities.